Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 7th of November 2025. Tech led the market lower overnight as investors started to take profits in the AI rally. Amidst concern about the economy and also the extent of this rally overall. So we saw. We saw the Dow, the S&P, and the Nasdaq, and that's slightly incorrect there. Down about 0.84 in the Dow, down 1% in the S&P, down 1.9 in the Nasdaq, down 1.88 in the Russell. Down for the week, we're down roughly anywhere from 1.2 to 2.35. The Nasdaq down 2.35. And we've had we've had these technicals change here. Apologies for the bar chart there; it's slightly incorrect. So let's have a look at the market map here. Nvidia let it down. I mean, look, it's just a sea of red here overall. There were some bright spots in this market, but not too many overall. Moderna jumped 2.5% on after they they had a sharp drop in third quarter revenue, but they topped consensus estimates. They also narrowed their forecast, but look, I think that's just a symptom of the healthcare sector being pretty low. Datadog gained, the cloud monitoring, cybersecurity kind of company, smashed expectations, delivered strong revenue growth, raised its outlook for the remainder of the year. It was up 20-odd%. And Warner Brothers was down 1.35, reported disappointing quarterly revenue. We do have Tesla's AGM coming up. I was sort of trying to hold out for that, but it's still going on, and I'm not sure how long it's going to go on for. You had the likes of Palantir and AMD yet again getting hit, despite those really good positive numbers that they've had. They've been, they haven't had a particularly good few days. They did bounce back slightly yesterday. It looked like they were going to stabilise, but they've just torn the through the lows to the downside now. As you can see sort of here, these are more defensive sectors, the healthcare sector particularly, which is cheap and defensive, and I think will gain more attention as time goes on if this broader tech sell-off continues, because it has been largely an ignored sector, and quite often they can head up. The healthcare sector can actually be the only glimmers of green in an otherwise fairly dour market in these situations. So I would expect that to continue. Berkshire Hathaway sitting on, I think, literally the world's biggest pile of cash at $380 billion. Warren's been selling, and well, I mean, he hasn't been right for the last 3 or 4 months, but maybe this is the start of something overall. But next, we don't really have too much in the way of figures tonight. We've got KKR, Nomura, and no economic numbers really. So not really much to do there. But another part of the reason we sold off overnight, and funnily enough, this sort of came into the news. And I'd seen this drip feed, and I'd been collating a few of these numbers, but it seemed to come out, they'd be talking a fair bit about it on Bloomberg and the financial wires, was the extent of company layoffs. So over the course of this week, I've actually been collating all the public announcements on layoffs from the S&P 500 companies, just because we don't have payrolls numbers, and we're not going to get payrolls numbers again this month. Who knows? We may not get payrolls numbers next month either. But there has been quite a few layoff announcements. So just the S&P 500 alone in October is 172,000 plus. 3-month totals looking like 300,000 in tech, retail, finance, manufacturing, logistics. BlackRock, 3% of their work. So some of these are unspecified as well. Spotify, 17% of their workforce. Hasbro, 20% of their workforce. Meta's getting rid of 8,000. Citigroup, 20,000. Intel, 25,000. Amazon, 30,000. Wow, and Amazon, was believed to be a lot more than that, and then they leaked it to the press and then changed the announcement number. But we're talking about this is broad sector. This is not sector specific necessarily. This is broad. So, and yeah, basically the last 3 months being around the 300,000 mark. I mean, obviously it doesn't include hiring numbers, so these are just the negative numbers. So please don't, I'm not calling a down 300,000, payrolls number when we come back on board with the employment numbers. I'm merely saying what we can track. This is really what's available here at the moment, and then that's not including the private sector. That's as in privately listed companies, and it doesn't include government jobs as well, which is I think there's been well over 100,000 of. And then on top of that, there's a lot of people in the government not getting paid as well. So that's really going to dampen the consumer, particularly, and we've started to see the consumer numbers start to really, the rot has really set in. Things like travel as well. We've got they're literally closing down 10% of the airports in the US, and it will extend out even more so. They've cancelled a whole bunch of flights, weekend flights, which in the US as well. So, and that's really going to seize up the US economy as well. Because there'll basically be no holiday trade. I mean, we're not that far away from Thanksgiving here at the moment. We're only probably 2 to 3 weeks away from Thanksgiving, and that's peak travel period for the US, and the air traffic controllers have already been absolutely stretched and exhausted for 2 months straight on skeleton staffs. It's not going to. I mean, yeah. I mean, without getting too political, they've got to get this sorted, because that will just be an absolute disaster to miss out on that peak period, and possibly an opportunity for there to be some form of protest about it. But there was some comments from Donald Trump last night. Let's get this thing restarted. But look, I mean, it was a comment. And it was absolutely wrapped in blame at the Democrats. So, whether that's a comment or whether that's policy with Donald Trump, you never know. I think he's more concerned about the Supreme Court ruling on the legality of his tariffs at the moment. I thought that would be over pretty quickly. Given he appointed, and it's a fairly Republican-based, Supreme Court bench. But I'm mildly concerned that this wasn't sorted out beforehand, and they just haven't, delivered it. He is stretching the boundaries of executive power. It's supposed to be a democracy. Congress is It's supposed to go through Congress. It's not supposed to be executive orders for absolutely everything. The presidency is not a CEO. They can't just make wide-ranging decisions without the approval of the people. So the longer that drags on, they would then have to return the tariffs, which would be an absolute disaster for the administration. But overall, I did want to. The technicals are starting to turn a little bit sour, particularly in the Russell now has a technical. The daily and the technicals a strong sell. We've turned to strong sells in the hourlies, in the Dow, the S&P, the Nasdaq, and neutral in the dailies, which is the first time we've seen neutral in a very long time. Still strong buys on the weeklies, which doesn't surprise me at all. However, I am really starting to get concerned because technicals is really the only thing that has been holding these things up, because we've had every reason under the sun for the fundamental, based on the fundamentals, to essentially head lower, and we haven't. If the momentum's not there to support the prices on the technicals, and the momentum systems actually turn around to be a sell, it's going to be very concerning, I would imagine, because there is literally there's no support for any of the fundamental support. Valuations are too high. We've got we've got these government shutdowns going on, and we really are. I've just got the right figures here now. I mean, those technical support, that momentum support from their passive funds, etc., is really the only thing sort of helping this thing climb higher. I mean, if the technicals turn sour and then the economy's softening and then the fundamentals aren't there to support this rally, we could start to see a sharp sell-off. So, as I said at the start of the week, I'm keeping a really close eye on these technicals. And I've updated these numbers here now. As you can see, the Euro stocks were down 1.1, Dow down 0.84, S&P down 1, NASDAQ down nearly 2, Russell down nearly 2. So, that bounce was very short-lived yesterday, and I would be extremely concerned about the next week if things don't start to improve. Not much movement in the commodities except for, obviously uranium, which is down nearly 16% for the week. It's really just giving back most of probably about a third of the gains in those stocks. But that whole sector was super, super white hot, and I'm not surprised that's pulling back with the equities at all, because it was very much a thematic trade. And as you can see, there's not really much in terms of the US dollar drifted off 0.5% overnight. These moves are very small, but they're made to look even smaller by the fact that, that URA ETFs had such a big move. Bitcoin drifted off as well, down 6% for the week. Look, gold, silver, copper, and platinum down, basically next to nothing really. Copper's down 1, platinum's down 1.7, but the others are down, less than 0.2% overall, which is probably not a bad result considering that the US dollar's down 0.5%. But so I look, we're definitely. It's been a great year. It's been a great 3-year run. I think we're up since this time 3 years ago. We're up nearly 80% in the S&P, and you've got to ask yourself, I suppose, how much is enough? Given that there's those underlying fundamental catalysts to the downside, and we're starting to lose some technical momentum, profit taking is probably a smart idea. I mean, this is one of the, as I've said a number of times, is one of the better 3-year rallies. I'm definitely not calling this to fall off a cliff. But, statistically, it's probably a very smart time to be going through your portfolios and doing a little bit of trimming and a little bit of tidy up. Because cash could be very, very valuable. There's a number of these risks sort of heading up our way over the course of the next month, with the if we are getting a combination of softer economic data and it comes out in one 2.5 to 3 month block because of the government shutdown, it's going to have a lot more panic factor than it would coming out 1 month at a time. So I'm a little bit concerned around that as well, and obviously the legalities around that Supreme Court decision. I'm almost certain that they'll rule in his favour. However, stranger things have happened. But look, make sure you tune into Bulls versus Bears with myself and Jonathan Takadina this afternoon. It will be released this evening. If you want more detail on those employment numbers, the website's got a quick article on how we collated those numbers, and you can have a look at a bit more of the detail there. But otherwise, have a great day and a great weekend, and we'll speak again on Monday.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.